Well, Stephen Vankolo announced his exit from MTN around the same time that it announced its exit from Cyprus earlier this month. It seems to be trying to get out of smaller and more problematic markets. Could the firm be eyeing more lucrative areas on the continent? Of course, MTN, a very successful Pan-African and Middle Eastern cell phone provider. It is interesting. I mean, Rob Shooter and that executive team has been in place now at MTN for the greater part of 18 months. The share price is lower than when they took over, yet there's been a huge tidy-up job. The Nigeria issues had to be done, big issues in Ghana, now getting out of a country like Cyprus. One gets a sense that we're about to see a lot of news breaking around MTN.
I think that was a solid deal. They got a good price for it. It was an asset that they got when they bought that Lebanese-based family that owned Investcom, and they owned a number of countries and licenses. They argued that it was the only one in Europe because Malta and Cyprus and places like that, believe it or not, are part of Europe. Look, I don't know, because some of the countries that they've got aren't exactly, on the world's favorite destination list. I'm thinking Syria, Iran, Afghanistan, and so on. But, that's MTN's speciality. I think the reason the share price of MTN sadly is lower is that notwithstanding the higher oil price and the recovering economic story in Nigeria, we now have the sanctions regime coming back to bear on Iran. Because remember, Fat Nixon, aka Donald Trump, got a hair up his nose about the Iran deal and has pulled the US out and is trying to block their access to SWIFT, the global payment system.
But that's the problem there. And also, South Africa's always had a headache in Iran, big headaches in places like Nigeria. And when challenged management in the past about taking on these higher risk assets, they go, well, the returns are good. One then has to wonder whether or not South Africa will be able to get its money, MTN will be able to get its money out of these countries.
Yes, and remember, these currencies often weaken when those sort of sanctions type moves happen.
So your returns then are negatively affected. Are you a fan of MTN, Viv?
Look, I think we've changed the industry. The industry has changed. So a couple of years ago, super profits, fast growing. It's not like computers. I mean, computers like PCs were like this huge thing in the 80s and 90s and maybe early 2000s. But that kind of cycle went through, and now it basically is a commodity. You go and buy a computer, you don't even know where it's from unless it's an Apple. And the same thing is applying, I think, to this particular sector. Yes, the only places you are going to find really good returns, really good profits are going to be in the riskier areas for a reason, because in any part of the developed world that you have these things, they're becoming commodified. And that's just going to be the way forward.
Because Vodacom had a trading update fairly recently as well. And that seems to be, I mean, it's plodding, but plodding competently and confidently and comfortably. You're getting a decent return out of Vodacom, aren't you?
Yeah, I'd have a slightly different view to Viv's. I mean, we saw Verizon's numbers this week. That's the big, high average revenue per user company in the US. Did see nice subscriber growth. So, yes, I admit that the content providers online seem to be where the juice is at, but I still think there's a good role for these companies because their ability to sell people on high data packages is certainly there. In Africa, we've got this weird transition where you've got a lot of people who still need to be brought into the voice market, let alone 2G and 3G. I'm still positive on these companies. I think there's lots of road for them.
Okay, so geopolitics, we've touched a little bit on it. Theresa May is taking over her own Brexit negotiations as a deadline at the 31st of March looms. A hard Brexit means Britain gets cast to the global wolves. You've got Donald Trump meeting Konrad Juncker from the European Union in the United States, while we having a BRICS summit in South Africa. How important is geopolitics for you right now?
Extremely.
Extremely.
Okay, because we under the Obama administration, I think everything was just going in a certain path. I mean, you look forward 18 months from
calm,
now.
steady, stable, and predictable.
You basically could have maybe 3 or 4 scenarios that are very different from each other in, say, 18 months from now. You could have Donald Trump tweets, tariffs are great. A couple hours later tweets, let's have no tariffs between the US and the EU. Okay, we have a possible trade war with China. We have, changing, it's called possible the Chinese are messing with the yuan to try and change the currency valuations. Those kind of things are really important. And then, of course, stuff like, the interest rate cycle happening, etc. 18 months from now, things that are political in nature could have a huge impact on where the market is.
Absolutely. Paul?
Well, it's been interesting that notwithstanding all of this turmoil, the most desired asset class globally are global multinationals with non-politically correlated business models, companies like Google and Amazon and others doing particularly well. It's almost as though people want to own those, not government bonds or any other asset.
Does it freak you out that South Africa is holding up quite well against the backdrop of all of this noise and all of this mess? Our market's fairly strong, currency is fairly steady relative to other BRICS partners of ours?
I think that is partly thanks to the change of political leadership we've seen. Because remember, other countries look worse. We're the sort of least dirty shirt amongst that layer of developing countries. Like, Turkey's had all sorts of drama. Argentina had some drama. Malaysia seems to be having drama with retired politicians getting arrested, all that sort of thing. So it's partly and possibly that, although we could be doing so much better.
Yeah.
We shouldn't get complacent. I'm really hoping that once our election is done and the new political landscape is settled, that we will have less nonsense and less politicking and more pro-growth policies and structural reform, I think is what our Reserve Bank governor called it last week.
Absolutely. Viv, I was with a group of people recently, a multinational, just saying the mood from their sort of head offices talking to them relative to what it was 12 months ago when they were considering shutting down is considerably more optimistic.
Well, look, I mean, the Zuma situation was a disaster. We were falling quite dramatically. But, the thing is that I always say is that even with Zuma in power, we weren't as corrupt as some of the other BRIC members, Russia was more corrupt than us. I mean, China, the guy just took over the country. Literally, basically, he got in, he said, fighting corruption, jail all my competitors, and then basically, I'm going to not announce my successor, and now my thought is the constitution, and now I'm president for life. Okay? Zuma never was anywhere near as ambitiously corrupt as that. So it is more factors in play than just corruption. The structural issues we need to talk about are obviously very important in South Africa. And we just don't seem to have a political class in South Africa that understands what makes economies grow.
Yeah.
And that's the fact. The policies they'll put in place will not help the country grow because they don't understand what makes successful economies.
And on that cheerful note, I was hoping to end on an up note, but that's a little bit gloomy. That's where we will leave it for this week, and also a nice wrap-up of the month's activities. My thanks to our guests, Paul Theron from Vestact and Viv Govender from Rand Swiss. You can give us your feedback via Twitter. The handle for that is @ENCA or @Bruce Business using the hashtag ENCA Taking Stock. Until next time, bye-bye.